What is good, YouTube? Charon FX here, man. Listen, this video is going to be a very short one, alright? This video is going to be based on the entries of the 200 pip move anticipated in our previous video, which is episode 13. So in case you missed that video and you want to learn how anticipated that move, make sure you go and watch episode 13. Because in that episode, I dropped a lot of gems in that episode. And before we get to business, make sure you subscribe to this channel. Make sure you hit that like button. Make sure you share this video with your friends and family. And make sure you comment down below on what topics you want me to tackle. And if you're also interested in joining my one-on-one mentorship, make sure you DM me on Instagram. The link is in the description below. You get me? So with that being said, let's just get to business. So in episode 13, right? What I said was, or what I anticipated was, we are only looking to buy after the breakout of this channel, okay? But we're only looking to also buy after the breakout and retest of this resistance right here. You get me? But at the time, price was here, the market closed around this side, okay? So my thought process was, if the market opens and it's able to break about and it's able to break out of this channel, all what we wait for is a retest of this resistance, then we go in for what? For longs. But fortunately for us, what price did was to come back and retest this trend line for the third time. You get me? So what we can see is, this is our first touch, this is our second touch, this is our third touch. All right. So after this third touch, what did I do? All I did was to draw an inner trend line, touching these market structures within the channel. You get me? There's the market structures I'm talking about. This is the lower highs I'm talking about, the structures. This lower high and lower high right here. That's all I did. All I did was I took my trend line and drew the trend line for it to touch those structures. Right, so after I drew my inner trend line, what was I waiting for? I was waiting for the breakout of that trend line. Okay, so if you are to go back in time, where can we see the breakout happen? Boom, right here. Alright, right here. This is where the breakout of the inner trend line happened. Alright, and what candlestick the price breakout with? A bullish engulfing candlestick. Look at that candlestick. Look at the bottom of that candlestick. We can see no wicks, meaning sellers are weak at that point. Sellers couldn't push price below. Alright, and also the bulls are in control of the market at this point. So after I had this bullish engulfing candlestick break out of the inner trend line, all I did was to enter my trade right here and put my stop loss below the wick of this, retest candlestick. And where did I put my take profit? Put my take profit right at the wick of our H4 higher high. If you want to know why we're considering this as our H4 higher high, go and watch episode 13. I did that. I did all the analysis on episode 13. So go back and watch episode 13 in case you are confused. Alright, so this was our first entry. Now, how did I get my second entry? So I got my second entry by waiting for the breakout and retest of this resistance right here. That would be where I would like to take my second entry. So if you are to play we can see, boom, we can see price broke the channel at this point. So after price broke the channel at this point, do I enter the trade? No. What do I wait for? I wait for what? I wait for a retest of this resistance zone slash a retest of our trend line, so we can what? Go in for our second entry. You get me? Good. So if you are to continue playing, so boom, right here, this is where we get a retest. So after we get a retest, do I still enter the trade? No. What do I wait for? I wait for a candlestick confirmation. You get what I'm saying? What did I say I wait for? I wait for what? A candlestick confirmation. So have you gotten a candlestick confirmation yet? No. Alright. Good. Right here. This is where we get our candlestick confirmation. This is where we get our candlestick confirmation. Look at this bullish candlestick. Do we see any wicks on top of this bullish candlestick? No. Because you don't see any wicks on top of this candlestick, price is telling us that at this point, the bulls are in control. The bulls are about to take the market to the upside. Okay, and this candlestick is also called the hammer. For you who don't know your candlesticks, this candlestick confirmation is called what? The hammer. So after we got this candlestick confirmation, which is the hammer, that's when I entered my trade. Put my stop loss right below this wick, and my take profit to where? To the H4 higher high. That's why I put my take profit. You get me? So if you are to play, you realize price starts to go into our favor, or price starts to go into our direction. All right, so now let's come back to our third entry. Remember I talked about this resistance, right? That we'll also be waiting for price to come back to retest this resistance right here. Good. So now all what we need to do is for price to come back and retest our resistance as a support. Let's for it to see if price came to retest it as a support. Boom. Right here. Price came back into our resistance to retest it as a support. Now what do we wait for? Now we see rejections, right? Telling us that the bulls are waiting patiently to push the market back to the upside. Again, that's why that's why we are getting the rejections. So after we get the rejections, do we enter the trade? No. What do we wait for? Wait for a candlestick confirmation. Alright, so now let's wait for the candlestick confirmation. Boom. Price comes back into it again and rejects it. Right. But with what we can see here, we see this three candlestick pattern formed, which is what our morning star candlestick pattern. But this isn't enough for me. You know why? Because this bullish candle never closed above this bearish candle. Anytime I'm trading the three candlestick pattern, I need to see the bullish candlestick close above the bearish candlestick, or the bearish candlestick close below the bullish candlestick, else I'm not taking the trade. So at this point, what I'm waiting for is a bullish momentum candle that is going to tell me that, okay, at this point the bulls are ready, or the bulls are on the go to take price to the upside. All right, so now let's wait for a momentum candle. Boom, right here. There's our momentum candle. Why is this our momentum candle? Because look at how this candlestick closed. Do we see any wicks on top of this candlestick? No, meaning the bears are out. At this point, it's the bulls which are taking over. You get me? That's why the bears couldn't even push price a little bit below to create a wick. You get me? This candlestick closed with full volume. You know, this candlestick closed with full volume. So this candlestick could be called what? A bullish Mirabozu candle, for y'all who don't know. Alright. Good. So after we had this candlestick, candlestick confirmation, what did I do? I enter my trade right here, put my stop loss right below this wick, and my take profit at our what? At our H forward higher high. You get me? So this how come I had 3 entries just on this pair. If we are to measure from the breakout of our inner trend line to our take profit, we can see that price moved 242 pips. You get what I'm saying? Yeah, you can see that price moved 242 pips. And if you are to continue to play forward, we can see that our take profit got what? Our take profit got smashed. You get what I'm saying? So this is how you could have also capitalized on this trade. And even before I started episode 13, I told you if you are trying to flip your small account or if you are trying to pass your funding challenge, make sure you watch this video to the end. So for you who didn't watch episode 13 to the end, hey, you missed out on this big opportunity. For real, you missed out on this opportunity. Alright? So taking a look at Euro AUD. What do we need to do first? Like I always say, first things first, man. The first thing we need to do is to identify our trend. And looking at our chart, what trend are we in? We are in a downtrend. How do we know we are in a downtrend? Let's identify our market structures, alright? So we have this higher low right here, okay? Which went ahead and created this higher high. Okay, so after this higher high was created, what did price do? Price came down and broke below a higher high and created what? A lower low. So at this point, we are not in an uptrend, we are in a downtrend because price has created what? A lower low. Why is this a lower low? Because this low is lower than that of this low. You get me? Alright, so after price created this lower low, what are we expecting price to do? We are expecting price to create what? A lower high. Alright, we are expecting price to create a lower high. Did price create a lower high? Yeah, price did. Why is this a lower high? Because this high is lower than that of this high. You get me? Good. So after price created a lower high, what are we expecting price to do next? We are expecting price to go ahead and create a new lower low. Do you get me? What did I say we are expecting price to do? We are expecting price to go ahead and create what? A new what? Lower low. So the price creates a new lower low. Yeah, price created a lower low. Why is this a lower low? Because this low is lower than that of this low. Do you get me? So after price created this lower low, what are we expecting price to do again? We are expecting price to create what? A new lower high. And the price created that lower high. Yeah, price came up and created what? A lower high. Why is this considered a lower high? Because this high is lower than that of this high. Alright, so after this lower high was created, what did price do? Price continued back down to create a lower low. You get me? After price created this lower low, what did it do next? It went back to create a what? A lower high. After it created this lower high, what happened next? It went back down to create what? A lower low. Do you get me? After this lower low was created, what happened next? Price came back to its lower high and created what? A double top. Alright? After price rejected its lower high, what happened next? What did it do next? It came back down to its lower low. Alright? Is this considered a lower low? No, because this low never closed below this low. So this low right here is still considered what? A lower low. Do you get me? So after price came back to reject its lower low, what happened next? Price rallied back up and created a new what? Higher high. Why is this a higher high? Because this high is higher than that of this high. Okay, or this high broke price's previous lower high, which is this high right here. You get me? So this becomes our new higher high. So at this point, you can say that there was a change in structure. Okay, at this point, we can say there's a change in structure. Price is no more bearish. Now price is bullish. Alright. So after this higher high was created, did price go ahead and create a new higher low? No, price didn't. What did price do next? It came back down, broke its previous lower low, and created a new lower low. What did I say price did? Price came back down, broke this previous lower low, and created a new lower low. So at this point, you can also say price has changed structure. We are no more in an uptrend. We are back to our downtrend. Why? Because price failed to create a higher low. Okay, it failed to create a higher low. And what did it create? A lower low. Do you get me? So at this point, we would say we are still bearish. So after price creates this lower low, alright, what are we expecting price to do next? We're expecting price to retrace back a little bit and create what? A newer lower high, so that we continue back to the downside. I repeat, after price creates this lower low, what are we expecting price to do? We are expecting price to retrace a little bit to create a what? A new lower high, so we can continue back to the downside. Do you get me? Good. So now let's go to the H1 time frame and let me teach you all how I caught 100 pips on this retracement. So coming to our H1 time frame, where do we go from here? What do we do first? We first identify the H1 time frames market structures, like how we did on the H4, right? So now let's identify the H1 time frame market structures. So we have this lower low, which created this lower high. Price went ahead and created this lower low, came back up to create this lower high, continued back down to create this lower low, came back down to create this lower high, continued back down to create this lower low, came back up to create this lower high. After this lower high was created, what did it do next? It created what? A higher low. Why is this a higher low? Because this low is higher than that of this low. Okay, so after price created this higher low, what did it do next? It went ahead and broke its previous lower high and created what? A new higher high. So at this point, the H1 time frame is telling us that it's no more bearish, it's bullish. Why? Because there's a shift in structure. Okay, why? Because there's a shift in structure. Okay, we are no more bearish, we are bullish now. Alright, so after this higher high was created, what did price do? It came back down, created a new higher low, and will continue back up. Do you get it? Good. But one thing we realize is after the shift in structure, right, we can see that price was trading within this channel. If I'm to draw my trend line to touch our highs, we realize that price was trading within this channel. Alright, so this is our first trend line. So we have our first touch here, and we have our second touch here. And if you have to draw our second trend line to touch the lows, we realize that price was bouncing off at this point and this point. Do you understand? So one thing we realized after drawing the point was price was trading within this channel right here. Okay, so anytime it came to retest the trend line, it bounced back to the upside to retest the opposite trend line. After it retested the opposite trend line, what does it do next? It goes back to retest the other trend line. After it retests the other trend line, what does it do next? It comes back down to retest the trend line. Alright. So after I saw this happening, after I saw price trading within this channel, what did I do? All I did was to draw an inner trend line from this point or from this retest through to this retest. Do you get me? I repeat, all I did was I took my trend line, drew from this higher high or this retest, this second retest of the trend line through to this side of the trend line. Do you get me? So after I drew this inner trend line, what was I waiting for? All I was waiting for was a breakout of the trend line. Okay, I repeat, all I was waiting for was the breakout of the trend line. And where do we get a breakout of the trend line? Right here with this bullish engulfing candlestick. Look at how price reacted along the trend line. When price came back down, what did he do? It went back up, rejected the trend line, came back down, went back up, rejected the trend line, came back, bounced off of this trend line, went back up, rejected the trend line again for the last time, and finally broke out of it with a bullish engulfing candle. Why is this a bullish engulfing candle? Look at how this black candle engulfed the red candle. Not only that, it also closed above our trend line. Do you get me? Let me go back again. I repeat. Look at how price rejected along this trend line. Look at how price rejected along our inner trend line. Okay. But when it got here and rejected for the last time, what did it do? It finally broke out with a bullish engulfing candlestick. Alright, so after the breakout of the bullish engulfing candlestick, what do I do? That's where I enter my trade. So my entry is right after the close of the bullish engulfing candlestick or right after the close of the breakout candle. And my stop loss is right below the wicks of this candlestick. And my take profit is right to where the trend line. That's where I was expecting price to get to. Good. So that was why I placed my take profit, which gives me a risk to reward of 1:5. You know, risking 22 pips to make 125 pips. As simple and easy as that. You get me? As simple and easy as that. In case you don't understand anything I did, go back and watch the video over and over again till you get what I was doing, right? So looking at GBP AUD, we're on the H4 time frame. Before we even get to it, let me ask you some. What trend are we in? What trend do you think we are still in? Do you still think we are in a downtrend? No, we are not in a downtrend. I think price has changed this trend. We are no longer in a downtrend. We are in an uptrend. How do I know that? So first of all, let's identify our market structures. Right? So first, price came down to create this lower low. Alright. Went ahead and created this lower high. Continued back down to create this lower low. Went back up to create this lower high. Why is this a lower high? Because this high is lower than that of this high. Okay, so this is considered our new lower high. So after this new lower high was created, what did price do next? It went ahead and created this lower low. Why is this a lower low? Because this low is lower than that of this low. So this is considered as our new lower low. Okay, so after this lower low was created, what happened next? Price went up and created a newer lower high. Do you understand? Good. So after this lower high was created, what did price do? Price came back down and created the new lower low. Alright. After this lower low was created, what did price do next? Price created what? A new lower high. Do you get me? After this lower high was created, what did price do next? Price created what? A lower what? Low. After this lower low was created, what did price do? Price rallied back up, broke its previous lower high and created what? A new higher high. What did I say price did? It went back up, it rallied back up, broke its last lower high or this lower high right here and created what? A new higher high. Meaning there's a shift in structure, or price has shifted structure. So we are no longer in a downtrend. We are what? We are beginning to start a new trend. There's a beginning of a new trend. You get me? So what I'm about to teach you all is how I was able to catch this move last week. You get me? I'm here to teach you all today how I was able to catch this move, or how you also be able to catch this move in case it repeats itself, how you'll be able to catch it. Alright, so now let's go into the 1 hour time frame and let me give you all the source. You feel me? Let me give you all the game. Let me put you on game. Alright, now let's get into the 1 hour time frame. So coming back to our H1 time frame, alright. Coming back to our H1 time frame, what do we realize on the H1 time frame? At the time I was about to take the trade, alright, I told you all previously on our H4 time frame that this was the move I caught. This was the move I caught, right? And how did I even catch this move? First of all, we need to wait for a break of structure, or we need to wait for a shift of structure in the H1 time frame. You get me? So looking at the market, where did the shift of structure happen? It happened right here. All right, this move right here, this bullish move right here, caused the break of structure, the shift of structure on the H1 time frame. Do you get me? So now, first of all, let's go a little bit back and let's identify the H1 time frame structure. So we have this lower low right here, which created a lower high, came back down, created a lower low, came back here, created what? A lower high, came down here to create what? A lower low. Alright, so at this very point, the H1 was all bearish. At this very point, the H1 was all bearish. All what we needed to do was to wait for what? A shift of structure or a break of structure, which tells us that, okay, right now we are done with the H1 bearish movement, so we are now about to rally back up. Alright, good. So what happened next after this lower low was created? Price rallied back up, broke its previous lower high, and created a new higher high. So after this new higher high was created, what was I waiting for? Let me use our replay so it becomes more practical. Okay, so now after this higher high, okay, was created, what was I waiting for? All I was waiting for was for price to come back and retest our previous lower high as a support. Remember, our previous lower high is also serving as a resistance. So all what we are waiting for is for price to come back and retest our previous lower high as a support. So all what I did was to take my rectangular tool and draw a zone right here. You get me? That's all I did. That's all I did. Let me clear this marks so it becomes very good. So that's all I did. So now let's hit the play button and let's see what price did. Boom. Now price comes into our zone, right? After price comes into our zone, what do we see with this bearish candle? We see a rejection. Okay, we see a rejection of that candle. So let's also wait for the next candle. Boom. At this point, if you are to take our Fibonacci 2 and draw from this lower low right here and drag to a higher high, we realize our retracement zone is in between our 50% and our 60% Fibonacci level. Do you understand? If you are to draw the Fibonacci from our lower low to our higher high, you realize that our resistance, where we are expecting price to retrace to, is between our 50% and our 61.8% Fibonacci level. Alright, so at this point, how many confluences do we have? We have about 3 confluences. First of all, we have a change in structure. Second of all, we have a break and retest. Third confluence, we have a what? We have a Fibonacci level retracement, which is our 50 and our 61.8 retracement level. So now, what's the last confluence you are waiting? And even fourth confluence, we have rejections of that zone. That's our fourth confluence. Okay, fifth confluence, what are we waiting for? We are waiting for a confirmation candlestick pattern. Do you get me? That's what we're waiting for. So let's continue to see how price plays out. Boom, right here we have our first confirmation candle, which is what? A morning star candle, a morning star candlestick. Do you get me? Because we have this bearish candle, we have this doji, and we have this bullish candle. But this wasn't enough for me. This candlestick party wasn't enough for me. Why? Because first of all, the time at which we had this candlestick confirmation wasn't right for me. And second of all, I didn't enter this trade because this bullish candle, anytime I'm trading a morning star and an evening star candlestick confirmation, right, I make sure I only enter when this bullish candle right here closes above the body of this bearish candlestick. I repeat, I wait for the body of our bullish candlestick to close above the body of our bearish candlestick before I enter the trade. But looking at this right now, what did we do? We didn't get that setup. So I decided not to enter the trade. So let's continue to see if we get any confirmation, any candlestick confirmations. So right here. Okay. Honestly, after price closed below the zone, okay, with this bearish Mirabozu candlestick, my thought process was that, okay, cool, if price has broken below our resistance, then we are coming back to our lower low zone, which is this area. Then probably we reject it and then push back to the upside. All right, then what happened next? A new bullish candlestick forms. All right, closes back in our zone. Let's see what next candle appears. Boom, a momentum candle. Bro, the next candle which appeared after our bullish candle was what? A momentum candle, telling us, boom, price is about to move to the upside. You get what I'm saying? Which also broke back into our zone, which also broke back into our Fibonacci level. All right, so at this point, I had a confidence to enter into the trade again. I had a confidence to go back or to get back into the trade again. So what did I do? I felt like me putting me entering right here, right, and putting my stop loss right here was too much. Man, I couldn't risk 50 pips. I couldn't risk almost 55 pips. Now I'm not gonna risk 55 pips. So all what I did was to set my limit order right here at the wick of our first what bullish candle. So that's where what I set my limit order. So now I'm risking about 35 pips, and I placed my stop loss below the wick of our momentum candle. Alright, so now I'm risking what? 35 pips. So after I placed my limit order right on top of the wick of our previous bullish candle, all what I was waiting for was price to trigger me in the trade by retracing a little bit into our zone. Alright, and tapping me in. That was all what I was waiting for. So now let's see if price did that. Boom, right here. Price, tapped me in. So my order was triggered. And right at that moment, I went into profit. So where would our first take profit be? Our first take profit will be at our 0%. Alright? Our first take profit will be at our 0%. And our second take profit will be right here at the 4H or lower or high. That will be where our second take profit will be, because when price gets to that point, it's likely it might chase back down. Because remember, though we are catching a bullish move on the H1, it doesn't mean the H4 is bullish. All right, the fact that we are catching a bullish move on the H1 doesn't mean the H4 is also bullish. The H4 was bearish at the time this trade was happening. The H4 was bearish, so it will be much safer if we put our second take profit right at the H4's lower high. Okay, in case price is able to close above the H4's lower high, then we are heading up to where? To our negative 61.8%. That will be our what? Our third take profit. That will be our third take profit. Man, as simple as that. So if we go ahead and still play out, this is how our trade played out. Our third take profit will go smashed. As simple as that. Risking 34 pips to make almost 200 pips. You know what I'm saying? Giving us 1:5 risk to reward ratio. As simple as that. Alright. So when it comes to BTC USD, your Bitcoin United States dollar, from what I've back tested in the past, okay, or from what I've back tested within these years, I feel like BTC, from my personal experience, I feel like BTC responds more to chart patterns that are normal, higher high, higher lows, or market structures. Okay, I feel like BTC responds more to the chart pattern strategy than our normal market structure or price action strategy. You get me? That's how I feel, or that's what I've realized from backtesting BTC USD. You get me? Other traders may have a different view, but this is what I think. Because when it comes to me trading BTC with chart patterns, I've made a lot of money with that strategy. You get me? And it's also easy for me. Yeah, so I use a different strategy when it comes to BTC USD, which is the chart pattern strategy. So now let's try to identify our patterns. For you who don't know the chart pattern strategy, please go to Google. It's very easy. Please go to Google and type chart patterns in forex, or forex chart patterns. It's going to come. Try to learn those patterns and try to implement them in your trading. It's going to elevate your game. You get me? It's really going to elevate your game. In case you also want me to do a video on identifying chart patterns, let me know in the comment section. I'll do a detailed video on chart patterns. Okay, good. So now let's get into the chart and try to identify our patterns. So first of all, let me zoom out so y'all can see. So when it comes to me identifying chart patterns, okay, I like to change from the candlestick charts to my line charts, because I feel like using that line charts makes it easier for me to identify the patterns. Do you get me? So now let's switch to our line charts. So using the line charts, what patterns do we see? So first of all, we can see the bearish rising wedge chart pattern. We are on the 4H. Okay, first of all, let's go to the daily, maybe. Looking at the daily time frame, we can see we are bearish. or we are in a bearish trend. You can see we are in a bearish trend in BTC USD, right? So now let's go back to our H4. So let's go back to our line chart and identify our pattern. So coming to our line chart, we realize we can identify our bearish rising wedge. What pattern did I say? A bearish rising wedge. And how do we identify a bearish rising wedge? So the market drops, right? Tries to consolidate in a form of a wedge, okay, before it finally breaks the pattern and continues to the downside. Do you get me? Good. So now all what we need to do is to connect our trend lines with the structures the market did. Okay. So we have our first trend line right here. We have our second trend line right here. So basically there's a pattern in form. This was the drop, came down point A, point B, point C, touch the trend line again, point D, point E, before it finally broke the pattern or the trend line and continued to the downside. Do you all get me? So if you are to go back, if you are to go back to the candlestick chart, you can see clearly that this was what price did. Some may also say price is consolidating. You know, price is moving sideways. Yeah, I mean, shit, price is moving sideways. But as it's moving sideways, we can still identify a chart pattern within the consolidation. Do you all get it? Good. So after price broke our bearish rising wedge, what did it do again? It consolidated. Can you all see the consolidation? Good. Some might wait for the breakout of this consolidation to take a trade or to go in for sales back to the downside. Get me? So after a breakout of this box, or after there's a breakout candlestick from the box, some might go in for sales. Get me? It's all good. So after price broke below, or after price broke out of the rising or our bearish rising wedge pattern, what did I do? I went to the H1 to see if I can still identify a new chart pattern, or to wait for price to create a new chart pattern. Okay, so after I came to my H1, what do I realize? I realized price was kind of consolidating. You know, price was kind of moving sideways. But from my experience, I can see price was still creating, you know, price was kind of forming a chart pattern. So all what I did was to go back to my line charts, and looking at our line charts, what can we see? Yeah, it gave me a confirmation price was, you know, creating a new pattern. So all what I did was to draw my trend line from this point right across to this point, okay, and draw another one on top from this point to this point. And this chart pattern is called the bearish pennant pattern. Like I said earlier, in case you don't understand this pattern, just go to Google and type chart pattern, forex chart pattern. Is going to come. Alright, Just learn them and just try to identify them in your chart and add them to your strategy, because it's going to elevate your game. Promise you that. Try to incorporate it in your strategy. It's going to elevate your game. Alright, so after I identify my pattern, what do I do next? I switch back to my candlestick pattern. So after I switch back to my candlestick pattern, what do I wait for? Wait for a breakout candlestick. Right? Okay, and looking at our chart, where was the breakout, or what was the chart pattern breakout, or which candlestick broke the chart pattern? This candlestick right here, this bearish candlestick right here, okay, broke the chart pattern. And it didn't just break. Look what happened when price got here. So after the last touch with this bearish candle, what did price do? Price created a new bullish candle. Alright, price printed a new bullish candle, and after price printed a new bullish candle, what candlesticks followed? Two bearish candlesticks, even three bearish candlesticks. Alright, so I decided to enter after the closure of this second bearish candlestick. Why? Because this second bearish candlestick closed below the opening of this bullish candlestick. So after the closure of this bearish candlestick, that's where I enter my trade. Place my stop loss right on top of this wick, and my first take profit to this level or this support right here. Okay, so that's why I place my first take profit, which just got smashed. Alright, so I'm looking forward for price to continue down to my second take profit right here, okay, to this level, or to the end of this week. You get me? So what I'm waiting for price to do is to break below or to close below this level, retest, and continue down. Do you get me? Good. Which gives me a risk to reward. So for my first take profit, it gives me a risk to reward of 1:4. And for my second take profit, will give me a risk to reward of 1:8 or 1:8.7. You get me? Good. All I need you all to do is to go back in time and try to identify or try to use this strategy to backtest BTC USD to see the outcome. Bro, I've used this strategy to catch over 1,500 pips in just one trade, man. This shit really works. This is what I've been using because I've backtested. Okay, so that's what I need you all to do. Go back in history and backtest with this strategy and let me know, man. After you find out this shit really works, hit me up on Instagram, alright, and let me know. But so with that being said, this is where I like to end my video. You get me? This is where I like to end this video. But before you click out this video, don't forget to subscribe, like, and leave a comment down below on what you think about using chart patterns to trade BTC USD. Okay, good.